Good evening, everyone. Today, I'm going to show you why Taiwan Semiconductor Manufacturing Company, or TSMC, is one of the most compelling investment opportunities in the market today, and why I rate it a buy with a target price of $424 per share. Right now, TSMC trades at about $360 per share, which means there is roughly 18% upside based on its intrinsic value. TSMC is the world's largest semiconductor foundry, but more importantly, it sits at the center of modern technology. Every time you use artificial intelligence, open your phone, access cloud computing, or interact with advanced electronics, there is a very high probability those chips were manufactured by TSMC. The company produces chips for the most powerful technology firms in the world, including Apple, Nvidia, AMD, and Qualcomm. These companies depend on TSMC because no one else can manufacture advanced chips at the same scale, reliability, and efficiency. TSMC also delivers exceptional financial performance with return on equity of about 34%, demonstrating how efficiently it converts capital into profit. It generates massive free cash flow and consistently returns capital to shareholders through dividends. Simply put, TSMC is not just part of the technology industry. It is the foundation of it. Industry analysis. To understand why TSMC is so valuable, we need to examine the industry it operates in. The semiconductor industry is one of the fastest growing and most critical industries in the global economy. Semiconductors power everything around us, including smartphones, computers, artificial intelligence systems, electric vehicles, and cloud infrastructure. In 2025, the global semiconductor market generated approximately $791 billion in revenue and is expected to exceed $1 trillion by the end of the decade. The primary driver of this growth is artificial intelligence. It requires enormous computing power, and those processors must be manufactured using the most advanced technology available. Let's talk about economic moats. TSMC's is wide. They dominate advanced chip manufacturing with over 60% global market share, and its leadership is even stronger at the most advanced processing nodes. This leadership gives TSMC pricing power, strong customer relationships, and a significant competitive advantage. As artificial intelligence adoption continues to accelerate, TSMC is positioned to grow alongside the expansion of the entire semiconductor industry. TSMC's growth is driven by several powerful long-term forces that provide strong revenue visibility. First is technology leadership. TSMC leads the world in advanced semiconductor manufacturing, including 3nm processing nodes, and is preparing to scale 2nm production. These advanced chips provide superior performance and efficiency and are essential for artificial intelligence and high-performance computing. Second is artificial intelligence demand. Companies such as Nvidia, Microsoft, and Amazon are investing billions of dollars into AI infrastructure, and TSMC manufactures the chips that power these systems. Third is long-term customer relationships. TSMC works closely with customers to develop chips specifically optimized for its manufacturing processes, which creates extremely high switching costs and long-term customer dependence. Finally, TSMC is expanding globally, investing billions into new fabrication facilities, or fabs, in the United States, Japan, and Europe. These investments increase production capacity, reduce geopolitical risks, and strengthen relationships with major customers. Together, these drivers position TSMC for sustained long-term growth. Financial analysis. TSMC's dominant market position is reflected in its stellar 2020 to 2025 growth. The revenue surged from $45 billion to $118 billion, while net income nearly tripled to $49 billion, with $34 billion in free cash flow and a net cash position of $70 billion. The company maintains immense financial flexibility. Exceptional efficiency is highlighted by operating margins over 44% and an ROE exceeding 34%, proving TSMC's massive pricing power and structural advantage. Porter's 5 forces. TSMC possesses a wide, durable economic moat, driven by the barriers to entry that are extremely high. They require tens of billions of dollars in capital and decades of expertise. Then we have substitutes. None exist for cutting-edge semiconductor manufacturing. Rivalry, low. At the advanced level, TSMC is the clear technological leader over Samsung and Intel. Buyer power, moderate. Switching costs are prohibitively complex and expensive. Discounted cash flow analysis. Now turning to valuation, TSMC generated approximately $34 billion in free cash flow in 2025. Assuming continued growth driven by artificial intelligence and advanced semiconductor demand, free cash flow is projected to exceed $57 billion by 2030. Using a 9% discount rate and a 4% terminal growth rate, the discounted cash flow model produces an intrinsic value of approximately $424 per share. The valuation reflects TSMC's strong growth prospects, profitability, and competitive advantages. Since the stock is currently trades at approximately $360 per share, this represents meaningful upside potential for investors. TSMC is led by CEO C.C. Wei, who successfully expanded the company's technological leadership and global manufacturing footprint, positioning TSMC as a clear global leader in advanced semiconductor manufacturing. The company benefits from strong institutional ownership, which reflects significant investor confidence in its long-term strategy and management. Vanguard holds approximately 2.1 billion shares, representing about 8% ownership. BlackRock holds roughly 1.7 billion shares, representing approximately 6% ownership. And State Street holds about 1.2 billion shares, roughly 4% of ownership. This strong institutional backing demonstrates that the world's largest and most sophisticated investors have confidence in TSMC's leadership, financial strength, and long-term growth potential. TSMC also demonstrates a strong commitment to environmental, social, and governance practices, which strengthens its long-term operational stability and reduces risk. The company has committed to increasing renewable energy usage to approximately 60% by 2030 as part of its long-term sustainability strategy. TSMC currently recycles approximately 96% of manufacturing waste, significantly reducing environmental impact while improving operational efficiency. In addition, TSMC invests billions of dollars into annual workforce development, employee training, and sustainable manufacturing processes to ensure long-term operational excellence. These ESG initiatives improve operational resilience, reduce regulatory and environmental risk, and reinforce TSMC's position as a responsible and sustainable global leader in semiconductor manufacturing. While TSMC is a strong investment, there are risks to consider. Geopolitical risk exists due to manufacturing concentration in Taiwan. However, TSMC is actively mitigating this risk by investing billions of dollars into new fabrication facilities in the United States. The semiconductor industry is also cyclical, meaning demand can fluctuate over time. However, long-term growth is driven by artificial intelligence, and advanced computing remains very strong. Customer concentration is another risk, as major customers represent significant portions of revenue. However, growing demand from multiple artificial intelligence customers helps diversify revenue. Despite these risks, TSMC's technological leadership and structural advantages make it highly resilient. In conclusion, TSMC represents one of the most compelling investment opportunities in the global market. The company sits at the center of artificial intelligence, high-performance computing, and modern technological innovation. It maintains unmatched technological leadership, exceptional financial performance, and massive barriers to entry. Based on discounted cash flow analysis, TSMC's intrinsic value is approximately $424 per share, representing meaningful upside from the current levels. TSMC combines strong growth, profitability, and competitive dominance in a rapidly expanding industry. For these reasons, I strongly recommend buying TSMC. Thank you.